Right. Right, then in class, I like to just type one. If you can hear me, if you can hear me, just type one in the comment section. Just type one in the comment section if you can hear me. If you can hear me, just type one in the comment section. If you can hear me, just type one in the comment section. Just type one in the comment section if you can hear me. All right. If you can hear me, type one in the comment section. If you can hear me, please type one in the comment section if you can hear me. All right, thank you. All right, so let's go. So I said there are different kind of markets. You have the trending market, you have the ranging market. The way you trade them is different. Okay. When market is trending, you can use these strategies that I'm sharing with you. You can use the moving averages. You can use the trend line. You can use trend line breakout. You can use Fibonacci retracement. I can also use as among several other things you can use. And we have the chart patterns. You have the support and resistance. You have the demand and supply zones and the likes. But my focus now is to begin to share with you how to trade trending market. When the market is trending, how do you trade them? So we have discussed, which I'm just going to re-emphasize tonight, and tomorrow we'll continue the class. I have a class tomorrow morning, a physical class tomorrow morning by 10 a.m. And then we had one today by 3 p.m. It lasted till almost 8 p.m. Okay, and well, it lasted till like maybe 6, I think around 7. Okay, so this right here I taught you it. You know, one of the things I'm trying to achieve lately, one of my inspiration recently about teaching people how to trade is that honestly, a strategy can be that simple. A strategy and hedge in the market can be very simple. Even though it's simple, if you spend time to work it out, it will always deliver for you. That doesn't have to be complicated. When you see some people's screen, they have a lot of complications. They have charts, they have indicators, plenty indicators. So the whole stuff looks very complex, and honestly, it should not be that complex. Henceforth, you will see how analyzing markets can be very easy. But at the beginning of learning to trade, before you have an edge in the market, it looks complex, it looks difficult. It's not that difficult. Honestly speaking, it's not that difficult. Okay. So for example, the crossing moving average. If you're going to be using that strategy to trade, you will need to find instruments that stay trending most of the time. And that was where I started. Some instruments trend more than the others. And you need to understand that. Some instruments trend more than the others. And I'll give you examples. Another thing that I can't, of course, that's for day trader actually. We're not going to be talking about that one now. This moving area I'm sharing with you now is not for day traders, it's for trend traders. Because the trader is riding on the trend until there's a trend reversal, on the trend change to the opposite direction. You keep riding on that trend until it changes. And that can make you rich. You'll be having fewer trades. You don't have to trade every day. You'll be having fewer trades, and most likely you'll be making more money. You'll be making a lot and a lot of money. I'll tell you. Because the moment you scale through break even, the moment your trade gains your direction and you are able to break even, then there's no fear any longer. You just ride on the wing. You just ride on the trend. The trend just carry you they go. Then you're making your money. And so we had but I just want to do a little quick something to just in a couple of minutes I'll be out of this class. Okay, I don't know what happened, my slide got corrupted, so I have to like prepare slide all over again, and that's not fun. That was not fun. I don't know how I entered class this evening and the slide was wiped away. I don't know. So I think it backdated. All most recent update on the chart on the slide was gone. But no problem. It's inside of us. We just have to bring it out, and it takes time to bring it out to start drafting and reconstructing. But it's inside of us. We reproduce it. And so let me share my screen. Can you see my screen? If you can see my screen, please type 2 in the comment section. If you can see my screen, just type 2 in the comment section. If you can see my screen, please type 2 in the comment section. If you can see my screen, please type 2 in the comment section. All right, thank you. Okay. So I'm looking at the. I'm trying to find your. All right, now. So I said one thing you need to that is very, very important. One thing very, very important is this: identify instruments that stay trending most of the time. Identify instruments that stay trending most of the time. And I've given you quite examples, instrument. I said number one is gold. Number one is gold. Okay? Number one is gold. This is gold now on my screen. Number one is gold. And gold trend most of the time. You can see gold trends for most of the time. Gold can stay trending for a very long time. And to use crossing average, this moving average cross, you can be sure that you will catch a lot of pips. You will catch a lot of pips. And then number two is NASDAQ USA 100. USA 100. It also trends for most of the time. It also stays trending. It stays trending. And then we have GBP USD. GBP USD. And I have stocks too. A stock like Tesla, stock like, most stocks trend for a lot of time. Then you have USA 30. Then I also have GBP USD, I have USD JPY. They also trend, they stay a long time trending. And trend trading gives you, if I mean, even though I day trade, there are some instruments I day trade. And actually, you see, I used to be more of a trend trader. But recently, I had to reconfigure my mind to day trade, And day trading took me almost 8 months to configure my mind. So I was just back testing, I was trading alone, I was not talking to anybody because I need my mind to be reconfigured. to day trading, which is not quite easy because the mindset of a day trader is different from the mindset of a swing trader. A swing trader can enter trade right now and walk away from his system and walk away from his device. I know that even though there will pullback, it can be in negative for 2-3 days. He knows that he's going to enter profit. Even if he lose that trade, he has just built that attitude. That's a swing trader attitude that, and even if he loses, he knows that even if he's losing trade, you know that one trade will pay back whatever has lost in the last previous trade, and you will deliver much more. But then I discovered that if if you are need to, when people are around you and then they just want to trade every day, so you have to like, because they need things to be bubbling every time. And that's the problem with young people, That's the problem with some of us, you just want everything, just want to play straight every single time. Just buy now, sell now, buy now, sell now. And then before you know it, you are not really, you didn't have good plans. Well, day trading is good, it's great. There's a lot of money in day trading. In fact, I love day trading so much. But for those who think that, oh, forex is a scam, that's why I'm trying to give you, I'm trying to give you on a foundation that will help your psychology to grow fast. So if I teach you swing trading and you enter a trade and you're in the trade for such a long time and you are making stupendous profits, you discover that you now find that trading is not a scam like some people make you to believe on the internet. Okay, now look at what is at my front. What I was trying to explain to you, I think yesterday's class. Unfortunately, the stuff has not been wiped away. So imagine, I said, when the red line crossed the blue line from down up, buy. Now the red line has crossed the blue line from down up. So when it was crossing, this is most likely going to be my entry. My entry is here. If my entry is there, then my stop loss is here. My stop loss is here. And so if my stop loss is there, then where will be my take profit? When the line crosses back on the blue, this is my stop loss. This is my take profit. Imagine my risk. I'm risking these pips. How many pips am I risking? I'm risking 661 pips. My risk. My risk is property. My risk is 661 pips. Imagine. 661 is my risk. And then look at my profit. My profit is how many pips? My profit is 3,589. My profit 3,589. Can you imagine? 3,589. Can you imagine? My profit. That is my profit. And what is the risk to reward ratio of that? Risk to reward ratio. Quickly, let me check it out for you. I don't want to upload the calculator on the screen so that it not take our time. Or maybe so. So I have say 3,589 divided by 661. That's 5.42, and that is awesome. 5.42. Sorry, risk to reward ratio here is 5.42. 5.42 risk to reward ratio. You can see, and that is massive. That's a very big. That's a very big. That's a very profitable trade. Okay, that means if you risk whatever you are risking, you are gaining over 5 times of it in this trade. and then we said it has crossed up, down again. Though we said something that's a clause that we only be going to be taking trade to the direction of 200 moving average. But then let's look at it from here. The red and the blue line have crossed the black line from up, down. They're going to be taking a sell. So if I'm going to be taking a sell, my sell, when they both cross, the black, somewhere around here is my entry. Somewhere around there is my entry. Then my exit is here. Then my take profit is somewhere around there when it crosses back. Somewhere around there. Somewhere around there. Somewhere around here is my exit. And then here now I'll be risking how many pips? 247 pips. Don't forget that this is good. It does not you don't have to use it on good. That's the 247. That is the risk. And then I want to check for my profit target. Then 316. Profit target 316. Profit 316. And the risk to reward ratio is 316 divided by 247, and that is risk to reward ratio RR is 1.27. Risk to reward ratio is 1.27. And then so imagine the same thing is happening here. It has crossed back up here now. So let's say you're even waiting until the two line. I told you when the two line crossed is strong, is always very strong. So let's say you're taking an entry here when both of them have joined here, and then your exit is when it crossed back in this place. And of course, your stop loss is going to be somewhere around here. Okay. And then but if you are taking your trade immediately they cross, your entry is going to be here. Then your stop loss is going to be here. So if that's what you are taking, because it has two variations depending on what you want. So this one now, 527 is your risk. 527 is your risk. Your risk is 527 pips. Risk 527 pips. That is the risk. And then your profit is going to be, your profit will be 815. Your profit will be 815. Profit 815 pips. 815 pips. And then your risk to reward ratio is going to be, the risk to reward ratio is 815 divided by 527. You also have 1.54. That's because risk to reward ratio 1.54 is one of the most important thing in trading. And especially a swing trader enjoys always have better, interesting risk to reward ratio, which is different from a day trader. A day trader, it's very difficult for a day trader to have good risk to reward ratio. I'm telling you. So it has crossed from up, down again. I'm selling because both of them have crossed the black line. Now they have crossed back up again. I'm buying. Just pay attention. Then if you want to do it on Nasdaq, this is Nasdaq now. If you want to do it on Nasdaq, this is Nasdaq. This is USA 100. You can do it almost in any instrument. This is USD JPY. Okay, this is USD JPY. This is USD JPY. The same thing. always in all currencies, in all instruments, but some just stay trending the more than the others. Look at it now. Look at USD JPY. You enter from here. You enter in this place now. This is your entry. This is your entry. And then this is your exit. And then this is your take profit. And then here now you are risking just, how much is your risk here? This is USD JPY now. How much is your risk? You are risking how many pips? 45 pips. You are risking 45 pips. It's not even up to 45 because this is where the price will be when the two lines have crossed. You are risking, risk is 31 pips. Risk here, risk is 31 pips. Risk is 31 pips. Okay, risk is 31 pips. And then, so let's say now from risk to your exit is from here to here. That's 136 pips. 136 pips profit. 136 pips. You can imagine. So what is the risk to reward ratio here? 136 divided by 31. You can imagine this kind of risk to reward ratio. You can imagine that is risk to reward ratio here is risk to reward ratio 4.38. 4.38 risk to reward ratio. And it goes on and on, on and on, on and on like that. On and on like that. Okay? On and on like that. It goes like here, both of them have crossed, then you are buying. Then both of them have crossed back, you are selling. They have crossed back up, you are buying. You know, they have crossed back down, they have crossed back up, you are still buying. And then just like that, staying patiently with it. And of course, this is not what we call price action. Okay, we're going to begin talking about price action maybe from tomorrow, from Saturday. Start talking about price action. We start going deeper. It's just like a cheat, or it is just like you just want to like give yourself, you don't want to bother yourself with price action, all this which candle is there, what is support and resistance, what is trend line, and blah, 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 what is it? You can just use this kind of strategy to enter your trade, especially if you have identified instrument that stay trending the most. Very important. Very important. Okay, so it also work. This thing also work on instrument like on derivative indices, on derivative synthetic indices. I'll give you option. I said volatility 100, then volatility 75, then crash 500, boom 900, then step index 300. Let me show you step index 300, which is very important. Let me share with you my screen with step index 300. You're going to love it. Okay, I hope you can see my screen now. Can you see my screen now? All right, to be able to see my screen now. So this is step index 300. Okay, you can see as it's crossing how interesting it could be, because step index 300 also stay trending, even though the spread is so much. The spread is so much, even if you reach the lowest loss side, the amount you are risking is still much because the spread on step index or step index is huge. But then if it's going to make, it can make you rich like crazy. So look at it now. It has crossed from down up. The red line across the blue line from down up, you buy. Imagine you are taking a buy here. Imagine you are taking a buy at this place where this line is crossing. And then what do you think is going to happen? Your stop loss is the last swing. You're entering here. Then your stop loss is the last swing. And see where your take profit is. My goodness. My goodness. This is enough to this alone with a lot size can build somebody else and buy Ferrari. You can buy Lamborghini as it is between here and here, depending on your lot size. And that's crazy. That's crazy. Even if you have been losing small, somewhere, some way, do you know how much this thing can make you? You understand? This step index 300 is crazy. It's crazy, bro. It's crazy. And so we said anytime it's the upper side of the moving average 200, I'm going to be buying. Look at it from here again. Look at it from here again. Both of them have crossed. Then this guy is buying again. Okay, when it's crossing here now, most likely this candle that is forming. And guess what's going to happen? The stop loss is there. The stop loss is there. See where the take profit is. My goodness. Did you see? That's take profit. So he's risking how many pips now? He's risking 130 pips to gain 130 pips to gain 240 pips. 240, almost double what he's risking, you know, and that's remarkable. That's remarkable. The same thing happens here. Look at it here. Look at it here. It has crossed up again. This guy is risking this this will be his entry where when those lines are crossing, this will be his entry. And guess where the stop loss is? The stop loss is somewhere the last swing, and guess where the take profit is? My goodness, my goodness, my goodness. Did you see? He's making money again. Like the whole thing started all along, all along. See this one. Imagine this guy is enter this trade. Imagine this guy entering this trade somewhere around here when this thing is crossing back somewhere around here. And of course, you know, his stop loss is going to be here. So the stop loss is not it, even when this candle comes down. Then imagine, oh my goodness. See money. Do you see money? Did you see money? Did you see money? Are you guys see money like that? Are you guys see money? See where this guy is going to come out of this trade. Are you guys see money like this? See, let me tell you something. All of you, in the next 1 year, you are owing me Ferrari. You must buy Ferrari for yourself. Buy it and show me. You must with this strategy I'm teaching you right now. Okay, I'm going to give you 2 years. I'm going to give you 2 years. You must buy an exotic car with this strategy and buy it for yourself and send me the picture. Just stay consistent with this strategy I'm sharing with you. It's simple. It's simple. Just practice again and again. It's very simple, bro. It's very, very simple. See where I'm entering here and see where I'm coming out. My goodness. And so it's here up again. Even though this one may not make profit, will have broken even. Maybe, you know, because what you're going to do, first of all, as soon as you enter and price goes in your favor, just going to break even and walk away from it. Now be watching it where it's going to cross back the blue line. We're going to cross back the blue line. Now you see market is consolidating here now. Consolidating. And I told you it is when it's crossed back or going to be buy. If you had bought here, at least you'll have broke even here. You're not going to lose anything. Now both of them have crossed back. You're entering your sell here, you're coming out here. Both of them have crossed back. You're entering your sell here, and you are still in the, do you know that somebody is still in you're still in this trade? This is even attracting me, because this is not how I trade now at the moment. But I'm teaching you right now is attracting me. Just dedicate an account to it and say, this is you and this account, though, this is what you should be doing. Oh my goodness. Oh my goodness. Oh my goodness. Now let me add something to it. Let me add something to it. It's called ADX. ADX. Are you still with me? Are you guys still with me there? If you are with me, please type 3 in the comment section. If you are still with me, type 3 in the comment section. All right, who else is with me? Please type 3 in comment section. If you are still, just type 3. Type 3 for me in the comment section. I want to be sure. I've seen Adeleke Babatunde typing 3 in comment section. Someone else, please type 3 in comment section. If you are with me, just one more person, then we continue. One more person type into the comment section. If you are with me. But I'm waiting. I'm waiting for someone else to type 3 in the comment section, then I continue. Is the voice lagging? All right, type 3 in comment section. I want to be sure. Okay. All right, good. So we continue. So let's continue. So now I want to add something. I want to add something again to this. Okay. So I want to add something to this. I want to add something to this. It is called ADX. So we'll be combining the combination. We'll be combining the EMA and ADX. So we go to insert, indicator, trend, and average directional moving index. It's called ADX, average directional moving index. So you click on it. When you click on it, you see something like this. You see the parameters. Parameter here, the period is 14. Period 14. Style is black color. Style is black color. Plus D1, green color. Green color. Then plus minus D1 is red color. Plus D1 just means bullish candle. Bullish upward movement. Then the red candle means the minus D1 red color means the bearish movement. Then you choose your thickness. Just choose the second thickness. Just increase the thickness. If you're using iPhone, it will show how you can increase the thickness. And then I click. Then I come to level. Level. Under level, you see hard. You see hard button. Click on the hard and type 22. Level 22. Level 22. Then you choose the color to be black, then make it thick, then you click OK. Pum. OK. Then you see something like this on your screen. I love it. But I love confluence now. When you have multiple things saying the same thing at the same time, multiple signals, multiple pointers, or multiple signal pointing to the same direction at the same time. So what is the rule for ADX? You know the rules for EMA means when the red line crosses the blue line from up down, I sell. When the red line crosses the blue line from down up, I buy. When the red and the blue line cross the black line from up down, I sell. When the red and the blue line cross the black line from down up, I buy. Those are the 4 rules. But then on ADX, it's a little bit different. ADX says when rule 1, I can't type it on the screen here because it will not take it. Now, the level we are looking at is level 22. Level 22. So we say when the green line and the black line our ADX that gives trend is the black line. When the green line crosses the black line with, okay, this is how it goes. When the green line crosses level 22 with the black line from down up, buy. Somewhere around here, buy. See, at this point now, the red line, the green line has crossed the black line, has crossed level 22 from down up. So they are crossing with the black. When the red crosses the level 22 when the green crosses the level 22 with the black is the buy. When the red crosses level 22 with the black is up, the black is up. It means we're going to be selling. But let's look at this one first. The red line has crossed the level 22 with the black line from down. And if you look at it here, it's in the same spot where the black line, where the red line, where the red line is crossing the, here is telling me to buy, here is telling me to buy. Confluence. Confluence. I expect it to be clapping where you are. Are you hearing me now? So here is saying the principle with ADX is that when the green line cross level 22, which is this level, with the black line from down up, buy. But when you look up again, from what I taught you before, the red line is crossing the blue line from down up, buy. So here he's saying I should buy, here he's saying I should buy. So what do? Just take your buy, then you'll have hands on pips in this place. You'll have hands on pips in this place. So let's look at it again. Here again, there's a little buy here. Okay. So let's see where here now, the red line is crossing level 22 with the black line from down up. From down up is a sell. When it is red, it's a sell. When it is green, it is a buy. But they must cross with the black. With the black. So here now, it's telling me sell. It's telling me to sell from here, but it's already selling from the top also. It's already selling from the top. It's so interesting that many years back, this is how I started trading. This is how I made my first set of money. But I don't trade like this any longer. As I'm sharing with it, and I think it is even attracting myself. But I don't trade like this anymore. I don't trade like this. But it's very fun, very interesting. I remember I used to lock myself up in a room just to catch how many peeps. The problem I was having there was that I'll close. The problem, you see, I deleted a particular box. Let me tell you how I traded many years ago. Let me return the box that I removed. Okay, the grid that I removed just a moment ago. See this grid. See this grid. See this box that you're seeing here. In those days, when I start those trade, I just target one box and I will come out. Just target one box. When the price gets to one box, I'm out of the market. That's how I was capping in those days. I was cap, I would make little money, I'll get out of the market, make little. This box, so that was my take profit. One box, I'm out. One box, I'm out. One box, I'm out. You know? But we don't trade like that. When I remember when I remember now, it does look so funny to me. Okay. But then it can still be make you profitable. Because you see, when it comes to trading financial market, it's about sticking to something that you have known very well. It's about sticking to something that you have known very well. It's not about knowing many things, but very few things, but that you know it very well, and that you have mastered very well. Look at what I'm telling you right now. It does not give you a headache at all. In fact, that's the reason I'm sharing it with you. I may not have even shared this strategy with you. I just want to teach you normal price action. But this one has no headaches. It does not give you shin headache at all. Just look at when those lines are crossing, you entering it when they, and then you stay with it. The beauty of this strategy is that you stay on it until it crosses to the opposite direction. You just stay on it. Just stay on it. Okay? Just stay on it. That will keep him in perfect peace. Whose mind stay on this chart? What did I just say? Sorry. So now you look at it again, that's cross here. So you just back test all of them. Where when you see them saying the same thing, is the confirmation to you, that I'm on the right track, I'm on the right path. Okay, so when the green line crosses level 22 with the black line from down up, it is a buy. You can see from here. You can see that both of them are crossing. Black may cross first, and then when black crosses first, you wait for the other color to cross alongside. When the other color crosses first, you wait for black to cross alongside. Now you can see they are both below level 22 here. Now they have crossed back. Black crosses first, then the green follows. And so at this point right now, you're going to be entering a buy, and you can see it buy. But you're already buying ahead. Okay. See, when you stay on this, the beauty of this strategy I'm sharing with you, it will stay on it for a long time until the reversal comes. So even when you lose, you know that this same strategy will return whatever amount of money that you have lost. So this is now ADX and this is EMA. This is a combination of those strategies and how they function, and you're going to love it. Okay. So you see from here right now, you see this is asking me to sell from here, but the sell is not much. It's asking me to sell from here, sell is not much. So Stay fellowship around these strategies, and both of them combine together. Because after concluding this strategy, I'm not going to talk about it again. We'll be entering straight to price action, where the real professionals are. My good, where the real professionals are, where you have the big boys. But you see, don't mind them. It's not really about the big boy. It's about mastering something that is convenient for you and that can deliver for you and has good risk to reward ratio, and you follow it. There are people who you don't know at all. In fact, there are people who make more money than those people that you know on internet. I'm telling you. They are not just being public out there. They make more than those guys that you meet on online. Okay, with very simple strategy, very, very simple strategy. And they're cashing out big with it. Okay, so except you have questions, I've taught you something. We have taken a step further in what we are learning. I've added ADX to it. So instead of postponing ADX to tomorrow, we've already shared it tonight. And that's good. And I think that is remarkable. That's remarkable. We've added ADX, then EMA combined together, giving you confidence. So, sometimes you will just tell yourself, I will only be taking trade when both of them are saying the same thing. When they're saying the same thing, that's what we call confidence. Saying the same thing. And it's not complex, it's very simple. So if you look at it and it conforms to your personality, then we'll go ahead from there. If you look at it and you like it, then we'll continue. Then you master it, then that will be your only strategy. See, don't confuse yourself. In fact, the reason I'm here is that what I want to do for you is that if all you know is all that I taught you, you will still be profitable. Because I don't want you to make mistake that some of us made when we were starting. That's why I'm looking for new, fresh mind. People who their mind have not been battered by losses and the likes, who will just follow my simple instruction and make a better life for themselves, for their family, and everyone around them. Okay? And that's the reason I'm here taking our time. Because I don't want you to, because some of us struggles hopping from strategy to strategy. You heard this one, hey, this is right there using today. Oh, this is this is tomorrow is SMC. The next tomorrow is HCF. Another one is ICT. All manner of different strategy here and there. And then you are confused with this one. And the day the strategy is not the day you lose money, you will think it was strategy that was wrong. You do not know that no strategy is perfect. So there's a downside to every strategy. You have only experienced the downside to that strategy. Okay. So I'm just a little bit much more. Before when I train people, I just leave you. I train you. I expect to build on what I've taught you. But right now, I'm a little bit much more intentional. I want to give you everything that if all that you know is all that done teaches you, you will still be profitable. This is my goal in the last 2 3 months. I know I've been teaching for years, but in the last 2 3 months, I discovered that people get confused by learning. So you have been on internet, you have watched this video. Listen, you don't need to know plenty things before you get it well. You just need to know few things and know them very well. And I just it. So at this juncture, I'm going to be drawing the curtain, and I'm expecting you to. I'm going to be drawing the curtain here. If you have questions, please ask in the class. And we'll continue again tomorrow. Tomorrow class is most likely going to hold, and I see you again. All right. Thank you and thank you and thank you. And if you learn something from this class, I like to type 4 in the comments. Just type 4 if you have learned something in this class. If you have learned something in this class tonight, just type 4 in the comment section. I like you to just type 4 in the comment section if you have learned something. If you have learned something new, you've learned something new. I've learned something in this class. I like to just type 4 in the comment section, in the chat box. All right. All right. That's good. So I'm here actually. I'm not always be online to attend to your question, but my goal is that you get it. My goal is that you'll be profitable. And my goal is that if all you know is what I taught you, so don't be in a hurry to start making profit. Don't be in a hurry. Your focus is to learning the process, learning what the process is, because see, it's more about the process before profit. If you put profit ahead of process, you will not get it. You will, even if you are making money, you will lose it back to the market. Focus on the process, focus on the discipline, focus on the process. If what you have learned is one thing in the market, can you stick with it for years upon years upon years? And compounded profit is what make you rich in this game. All right. I'm going to see you again tomorrow. Thank you and God bless. Thank you and God bless.